Swiggy and Zomato under CCI investigation for alleged competition law violations. Swiggy and Zomato recently both companies came under scrutiny from the Competition Commission of India or CCI over their business practices. What is this investigation about? According to the findings by the CCI, both companies may have violated competition laws. This essentially means that some of their business practices might be unfair to other competitors or restaurant partners. The CCI's findings are based on non-public documents, meaning they are not fully available to the public yet, but these reports still give us a pretty clear picture. What did Zomato do? According to the CCI, Zomato imposed pricing and discount restrictions on its restaurant partners. This means they told certain restaurants to keep their prices within a specific range and offer certain discounts. If restaurants didn't comply, Zomato could penalize them, affecting their visibility or benefits on the platform. Moreover, Zomato reportedly signed exclusive contracts with some partners where they promised lower commission rates to restaurants that agreed to list only on Zomato. What about Swiggy's practices? Swiggy also faced allegations of anti-competitive practices. The report suggests that Swiggy has pressured restaurants to keep price parity. In simple terms, Swiggy told restaurants that they should not list their food items cheaper on other platforms. If they did, Swiggy reportedly threatened to lower their ranking on its platform, which could impact the restaurant's business. Additionally, Swiggy promised certain restaurant partners business growth if they agreed to exclusive partnerships, meaning they could only list on Swiggy and not on other platforms. The CCI's investigation started back in 2022 after a complaint from the National Restaurant Association of India. The NRAI alleged that Swiggy's practices like exclusivity agreements, price parity requirements, and involvement in downstream markets were hurting competition and ultimately affecting restaurants. In Swiggy's Red Herring Prospectus, which is a document they submit for IPOs, Swiggy openly noted that the outcome of the NRAI litigation might have a negative impact on their business. This acknowledgement shows that Swiggy is aware of the potential risk. What's the current status of investigation? As of now, the investigation is in its final stages. The CCI leadership is reviewing the findings and they will decide if there will be any penalties or changes required in Swiggy and Zomato's business practices. If CCI decides on penalty or changes, Swiggy and Zomato have the option to contest this decision. What are the Swiggy and Zomato saying? Interestingly, neither Swiggy nor Zomato has responded to queries about these findings. While Zomato's share price dropped by about 3.22% to Rs 247 per share, Swiggy's IPO showed strong interest and was subscribed 3.59 times on the last day. This indicates that while the news might be impacting Zomato's stock, Swiggy's IPO is still generating significant interest from investors. What happens next? The final decision from CCI is crucial. If the CCI rules against Swiggy and Zomato, they might have to change certain business practices to comply with competition laws. This could impact how they work with restaurants and the options available to consumers. But remember, Swiggy and Zomato can also challenge the decision if they don't agree with the findings. This situation could be a major turning point for how these platforms operate in India.